Nilesh Shah is now joining us, Managing Director at Kotak Mahindra Asset Management Company. Nilesh bhai, good morning. I'm wearing green, you're wearing red. I just noticed. But I'm sure not. That is the Kotak color, though. It's not an indication for anyone who's confused or wondering. But I just wanted to start with, what I put out this morning, and the table will come up for our viewers once again, right? When all this started, Nilesh bhai, in March, April, the hope implicitly here was that we'll correct some of the tariffs lower for us to be able to sell to the US versus competing countries. As things stand right now, and hopefully this gets negotiated lower, we are 25 plus. Most other countries are 15 to 20. So that's the beyond markets here and now. Is this the bigger disappointment? How are you reading this?
Undoubtedly, Prashant, but this is a disappointment. In the April Liberation Day tariff, India was on the lower side and countries were on the higher side. Now, as things stand today, even without penalties for Russian trade, we are on the higher side. And countries like Vietnam, which is transit for China to some extent, are on the lower side. So undoubtedly, from being placed in the front category in terms of favor, we have now moved towards the back category. Well, the positive side is that even a one-trick country like Bangladesh, which is dependent upon textiles, they were levied heavy tariff on textiles much higher than India. And by and large, they have survived. So clearly, we have to focus on our domestic economy and continue to engage with US to get some offset and to get some exemption for items like pharma. Hopefully, that will ensure that the overall tariff which will be levied on India will still be manageable.
Nilesh, good morning. So good to have you on. And it's become a bit of a perfect storm because now we have this tariff issue, which is a sentiment negative. We anyway had FPI selling. And then we have the earnings story, which we all been waiting for that turnaround. Now, in this perfect storm, the only light on the ship seems to be the light from domestic investors. Those flows that have been consistent, those SIP numbers that have been consistent. But aren't the headwinds becoming a bit much? Because investors' patience is also getting tested. It's been a ranging market for a while. I mean, what do you see ahead next couple of months?
So, Surabhi, for 10 years, we delivered positive return. At some point of time, law of average will catch up with us. And as you very correctly mentioned, we are in a perfect storm right now. Valuations are on the higher side. Earnings growth is in mid-single digit to high single digit this quarter. And on top of it, from being somewhere favorably placed on tariff, we are now probably placed on the slightly unfavorable side. Domestic investors will have to be long-term investors and they'll have to moderate return expectation. We still believe our long-term growth story remains intact. In US policy making, we have seen many flips and flops. As we speak today, copper prices in US are on the way down because refined copper has been exempted from the tariff unexpectedly. So there will be always U-turn in US policy making as longer-term strategic interests of India and US are aligned. I just hope and pray that we focus on accelerating domestic growth and then we get support from domestic growth as well as exports over a period of time.
You think we will see a concerted... Thanks for waiting, first of all, and as we took that detour. Do you think we need to see and we will see a little bit of pump priming from the government? Do we have space for that, Nilesh bhai, especially on GST rationalization? RBI is already really behind growth in a big way over the last... since the new governor took over. What's your sense?
So on the monetary policy side, both in terms of rates and liquidity, enough action has been taken. Now, on the rate side, there is still room because this year inflation is expected to remain lower. On the other end, on the fiscal side, we have a lot of space, but we are committed to fiscal discipline. So my recommendation will be, let's give GST cut or any other support which is required and balanced it through divestment or asset monetization. There is still room for both divestment and asset monetization at current level of liquidity and market, and that should be used to support the domestic growth. But apart from those short-term measures, what we really need is encouraging local industry through improving ease of doing business. We have taken many steps to improve ease of doing business, but that animal spirit is still missing in private investment. We have to sit with private investors and listen to them about their issues. Some things could be related at state and local level. Something could be related to local purchases. Something could be related to new age industry. Essentially, we need to accelerate growth supporting policies through improving ease of doing business as a medium to long-term answer.
Nilesh, so before we let you go back to your usual business today, that's the question. I mean, mutual funds have been the biggest support for this market. You expect on days like today, there would be big buying and, how are they looking at it? Because there's always that debate that foreigners are selling, saying valuations are high and, earnings are not coming through. But domestic MFs, because they're getting the money, they're simply going out and buying. Of course, latest MF regulations could look at changing that. You don't have to buy if you have a lot of money, but more on that later. But just now for today and next couple of days, what do you expect?
And what's the liquidity position, Nilesh, if you could help us out?
So, Nigel, we have reasonable liquidity in terms of cash. Average balance will be between 3 to 5%. Second, we also have asset allocation fund and balance advantage fund, which can increase equity as and when market or valuation starts coming down. So collectively, anywhere between 200,000 crore to 300,000 crore could be potential liquidity with domestic investors. More importantly, Surabhi, we are not here to support the market. We are here to make money. When there is so much of uncertainty, will we be aggressive buyers? Answer is no. We will wait for prices to settle and then build position. So clearly, we will be a buyer, but we will buy where we believe valuations are in our favor. Foreigners invested from the mid-90s, they have made money and hence they are booking profit. We were a little late in accumulating Indian growth story and domestic investors are buying now. Now our collective ownership exceeds foreign ownership. More importantly, it is also time differential. We are long-term investors. Many foreigners are probably taking a shorter-term call. So at the end of the day, if prices go up, both domestic and foreign investors will benefit.
Okay, all right. Nilesh, thanks a lot for joining in. I always take your advice very seriously. And as I always tell you, I'm keeping the faith. So as you said, time to look at it for the longer term. Appreciate you joining in and giving us your comments.